Alright, welcome to the weekend video, the unusual weekend video, back on Saturday afternoon here, and we're going to go through the markets as usual. I know I always say this, but for any new people, it's always nice to hear what's going to happen. So we'll start in the currencies, go through then the rest of it. So that didn't really help at all. But anyway. Okay, so this is euro dollar. This is what I've been tracking in euro dollar for a while now. So I have a possible wave 2 completed after an expanding wedge. That's what I'm calling that monstrosity there. So it's a C wave. You have wave 1 down, wave A up, wave B down, and then an expanding wedge, wave C. I know it's loose, but it's what we got at the moment. And then we have a good 5-wave pattern to the downside here in wave 1. We came to meet the lower trend channel line. About time for a swing higher, and if this is a corrective swing higher, then it should be a 3-wave pattern. So we have A, B, C hopefully underway now. So we've been looking for that C wave to start for a good week now. So I'm glad to see on Friday that we got a spike higher. So here's the hourly chart. That's the A, B, C pattern. And that spike higher should start wave C up, and we would expect to hit about 112.50. That'll be the wave A high there. Before that, excuse me, wave C is over and done with. So next week, I want to see this 3-wave pattern come to a conclusion, and then at that point, we'll make a decision on how this is about to play out. It'd be interesting to see, just for myself here at the moment, where we're likely to come in at in terms of retracement. So yeah, we're actually looking up that 112.50 level is looking at about 62%. So yeah, it's in the target zone, and we should be ready to rock then back down into wave 3. So next week is looking positive, up to about 112.50, maybe a break, maybe a throw over. Resistance up at 114.12 should hold, and then we should turn lower again into wave 3. That's the outlook for euro dollar. Not much change, not much different in pound dollar. I have this resistance level in here where the triangle ends and where the kind of the low of that expanded flat wave 4 hit. So that's about 125.20 or so, and that's been kind of the reasonable target, let's say, for wave 2, and I'm not sure it'll actually get there at all. We have on the 4-hour chart, we've now hit the 200 MA again with this retracement. So this leg down has not allowed much of a pop above 200 MA before crashing again. You know, you can see over there on each leg down, we've retraced, well, wave 2 retraced above the 200 and then just crashed again. Wave 4 retraced to pop above and then crash down. So maybe wave 2 will, at a larger degree, will allow a larger pop above it, but if the downtrend is to remain in force, we shouldn't go for too long above. And I think my upper target would probably be about that triangle there, 125.20. So the hourly chart. It's been an absolute monstrosity. This you can see here that 125.20 level there. That's the previous triangle. Excuse me. So that would be the upper end of resistance. The lower edge of that triangle, the lower part of the range of that triangle, it comes in at 123.80. So that'd probably be a more reasonable target for wave 2 to complete. That'd be a retracement back up into that kind of cascade lower in wave 3 of 5. So that's we're up in that level right now, so I'm not sure we'll head much higher. The only caveat I was talking about would be if the rally that's occurred here in wave C is only extending in wave 3 right now. So if this wave 3 was just here, so that'd be wave 1, 2, an extension in wave 3, which would be 1, 2, 3, 4, 5 in wave 3, and then you'd expect a further 4th wave probably to bounce on that channel and then head up towards resistance again. So that is kind of the two scenarios I'm working with right now. If we are to turn lower again, and wave 2 is actually complete, well then 121.93 is the first indication that the next turn down has begun. So if we get a break of 121.93, that would probably kill wave C for the moment. Okay, so we watch that level. Okay, the Dow closed even lower last night, or spiked even lower last night. In the aftermarket, you may notice that the spike lows and spike highs on my chart are slightly different, because this chart is actually a derivative chart. So I've said this 1,000 times as well, but for new people, it's a derivative chart, and it's actually an amalgamation of, say, the pre-market and aftermarket and cash market as well, and then throw in on top of that it's also a derivative. So you can see why, if you are just running on a chart from the cash market, well then you may differ slightly in the extremes, but the patterns are still the same. Okay, so we changed to the alternate pattern on Thursday night, I think, and then Friday we got a complete smackdown for stocks. The correction of this wave 1 lower, what I'm calling, is still a bog standard 3-wave correction. It's a flat correction. It may be type of classed as a running flat correction, because wave C did not break above wave A. At least I don't think so. In the Dow, so we have 3 waves up in A, 3 waves down in B. See, the tricky part about this wave B here was the wave B was actually an expanded flat. So the internal B of B broke above the wave A high, so that's kind of why I was going with the idea that this was wave 2. And we did get a nice 5-wave move lower. So if this is an expanded flat, you would expect a 3-3-5 move. So that's probably 3 waves down there. It's hard to count that as 3, but it must most likely be. And then 5 waves down, so 3-3-5, expanded flat wave B, and then we ran higher in wave C. So that wave C must be a 5-wave pattern. And we seem to have kind of caught that on Wednesday there, or sorry, Thursday. So the market kind of, you could call that like a mini crash there on Thursday, although, what's 500 or 600 points now these days? Nothing. So I'm calling that wave 1, let's say, of wave 1. So we could, if we're getting an extension down in a large third wave, wave 3 green. So let's put that down here for pig iron. So I would be expecting a 5-wave move lower in wave 1 of 3. So so Thursday night we changed to that alternate account, and then we were looking for a sharp move lower. We got that nice sharp move lower in wave 1. So now what we need is a continuation lower. So we have this downward sloping trend line. That is just to kind of illustrate for us where any, let's say, retracements or corrections higher should be completing. So if we are to get a bounce in wave 2 early next week, sometime, maybe Monday or Tuesday, then we should definitely finish below this this downward sloping trend line. And if we get a break of that, then I'll have to question myself completely, like I always do. Like the market forces you to do, to correct and to, let's say, anticipate failure. But for now, we have a 3-wave correction complete. We completed it, let's say, right in the zone where you would expect it to be completed, right between the 50 and 62% retracement levels. We have 5 waves down, 3 waves up. We had bearish divergence. We had a top out at a lower high, let's say, in 4-hour MACD. The price has it did pop above the 50 MA, but it never reached the 200 MA, and we spiked lower again. So if wave 3 is going to happen, now is the time for it to happen. So next week I'll be looking for wave 1 of 3 to continue lower with any interim retracement, staying below that declining trend line. And we should prepare, let's say, for the larger event to come our way. And the video is now complete. Thanks so much for joining me during the week and being putting up with me. I hope you have a good weekend and be good. Don't do anything I wouldn't do. Godspeed, God bless, and we'll see you Monday evening again. Bye bye.